board Devin Choksi as well and find out what he's making of the markets right now. Devin, hi, good morning. Good to speak with you again. Just wanted to understand what is it that you're hoping for the markets come the month of January. We'll have a lot of triggers to play with. The Trump administration will come to power. You'll have earnings back home. And then, of course, the run-up to the budget as well.
Aisha, good morning. Well, I think 2025 definitely appears to be more promising as far as our economy and corporate outlook is concerned. If in the earlier years we have seen the higher amount of investment going in building the infrastructure, in building the capacities, 2025 onwards, we are likely to see the business generated out of this particular infrastructure and the industrial capacities that we have created. So, from that perspective, I think it is time to remain positive about the market and definitely believe that the outlook going forward remains pretty certain as compared to what we have seen a lot of turbulence in the past. Maybe a couple of points, if one could possibly look at the possibilities, are one of them would be the war-related situation in these countries is likely to come to some kind of corrective levels in the sense that I think we are not likely to be escalated wars, I think, which one has seen in the past. On the contrary, I think there should be a good possibility of calming down in this particular situation. Should that happen, then the next leg of construction would start happening in those countries. And that's where I think the major thing would arise, wherein I think the participation of major countries in building those economies which have been disrupted, I think, would start. So commodity-related businesses would definitely appear to be more promising going forward, along with the finance business, where the chances of rate reduction likely to continue for next 6 to 8 quarters. That could possibly mean that some of the banking and financial companies which have disappointed the market in the last 1.5 2 years, they could possibly start doing well. So yes, I think there would be selective pockets in which you are likely to see the things working well in coming 12 months or so, and that's where we remain positive. Fortunately, the valuation-wise, some of the large cap companies today are available at a pretty attractive level. And whenever the Nifty 50 companies have gone below 20 times price earning ratio, the reasons have come, and probably these companies have started getting revalued better in a bull market. So we remain distinctly positive about this possibility as well, because the valuations have corrected and that opportunity is still around.
Valuations are still attractive and continue to be positive on the markets. Devin, hi, very good morning. Wanted to have your take specifically on the FMCG basket, because what we are seeing in this whole particular year, this was majorly the index that has seen a decline on a YTD basis. So going ahead in 2025, do you believe that the companies can be more optimistic about the growth outlook? What could actually change for the FMCG names there, and also help us with your take on the valuation front?
Actually, yeah, good morning. Actually, the higher amount of the issues have remained largely with the inflationary pressure in the economy. Uh, the central bankers have been reluctant about reducing the rate of interest. As a consequence, the cost of the commodities and input costs haven't come down. Generally, I think after you start reducing the rate of interest, I think this cycle gets into effect, I think, after 2 quarters or 3 quarters, wherein you see the fall in the prices. Assuming that in the first quarter of calendar year 25, the central bank or the RBI start bringing on the rate of interest in line with other global markets, I would like to think that in second half of the calendar year, you would be seeing relatively better performance coming from majority of the FMCG companies, largely because of the fact that the cost, the input cost would probably start getting corrected, and it would start helping these companies both in the area of maintaining the margin. At the same time, I think for the consumer to have the better affordability of buying the products. Personal care, healthcare products, even including, I think, the home care products, all these products, food products, all these products are victimized due to the larger part of the issues related to inflation. And that is where I believe that I think you hold a good possibility. But maybe in next 1 quarter or so, you would start seeing the corrective actions as far as the commodity prices are concerned. And that would be the time to buy into some of the FMCG companies, particularly the food companies, a relatively better place in my viewpoint.
Okay, so those are the companies that are relatively better placed. Devin, I just wanted to get a sense from you regarding pharma, because that has been clearly the outperformer of late. And today, of course, Lupin is going to be in focus on account of two news flows. Of course, it's managed to acquire one of the diabetes drug, but separately and more importantly, Amneal's drug, which is ProAir, has got delayed a bit, which means good news for Lupin coming in. What's the take coming in with the competitive intensity getting lower for this, high margin drug?
Yes, Tanisha, good morning. I believe that I think the larger part of the unfolding of some of the specialty generic products is likely to play out well in 2025 and 2027 period, wherein majority of the pharma companies, I think, who have shown the visibility of these particular products in past are now likely to fetch the revenue, and that is where probably you are likely to see the numbers picking in along with. Fortunately, I think the input cost has remained under control, and they have been in a position to get the, I think, the better realization for the specialty generic products. I think where they relatively have less competition, as I would say. Given that situation, some of the larger ones like Dr. Reddy's, Cipla, uh, Sun Pharma, Lupin, this kind of companies have definitely better roadmap ahead as far as I think launch of some of these specialty products are concerned, and we would remain optimistic about it. Maybe I think the market prices are reflecting a lot of things at this point of time. But in a corrective downside in the market, they become buy opportunity to earn 15-20% out of these portfolios.
Devin, the one sector outperformer for the year has been real estate. Do you think the prospects are looking as bright in 2025 as well, or do you think much of the gains would be behind us now?
So I'm not too sure about I think the stock prices, but I am definitely confident about the real estate as a play where probably I think we are likely to see some of the larger, the premium real estate companies going to play out well in this 25 year. We believe that the premium real estate segment is going to hold the key here because the larger part of the wealth creation which is happening through the financializations of the assets is basically helping the premium real estate segment significantly. We would demand there are no pure focus real estate companies which are into the premium real estates or the premium housing, but there are companies which are in pockets operating into the premium housing segment particularly. They could possibly be beneficiary of this particular drive. As such, we remain distinctly optimistic about the long-term growth prospects of real estate, largely to the fact that the India's growth program will definitely have a positive impact on the real estate continuing. Stock market price, maybe I think most of the things are discounted in the price today. Everything is fully priced in. Unless you see think some distinctly different kind of a proposition in the listing space, probably you are not likely to see major gain happening here, though the profit performance will continue to surprise market on the upside.
Right, so that's the take coming in on the real estate basket.
But Devin, the other thing to watch out for is how the industrials and capex really pick up. I mean, news just flowing in for Ashoka Buildcon that the company has managed to sell 11 SPVs and it's going to get liquidity to the tune of around 2,400 crores. So Ashoka Buildcon is going to be in focus on account of that. But any other infrastructure and EPC name that you have been tracking closely?
Well, I think overall the entire size of the opportunity is becoming big because the government is spending big time money on building the infrastructure. Suppose if the budget of 11,000 crores, I think, has been completed, and further amount of money has been allocated in this particular period. In my viewpoint, I guess I think the government will be distinctly comfortable allocating more amount of money towards building the infrastructure even in the current year. So that's where the budget allocation would play a meaningful role. Whether there are any immediate opportunities available, I believe that within the ancillary space, I think the companies are distinctly favorably placed, particularly the capital goods segment, where the order books are regularly filling in, and at the same time, executions are happening also regularly, given the size of execution that the government is making it happen. So, in my viewpoint, I think the opportunities are around. Whether I think one can immediately spot on some and buy immediately, I'm not too sure because some of the mid cap and small cap companies, which are the prime beneficiary of larger amount of growth program under infrastructure, they are already quoting at a premium. So unless I think we see the premium coming down and giving you a reasonable downside, reasonable margin of protection as far as I think the buying is concerned, I wouldn't be immediately in a hurry, though we are shortlisted companies and we have been accumulating or rather holding these companies in our portfolio.
Coming back to you, what is the outlook for the telecom space going ahead in 2025? Why I ask is that because Bharti Airtel definitely makes to the top gainers of Nifty, one of the top gainers in Nifty 50 for this particular year, almost a 55% jump is what we have seen. But given the outlook as well as the news flow regarding the expected tariff hikes, do you believe that Vodafone Idea as well as Indus Towers are some of the counters where margin of safety actually lies in, and maybe it's time to bet more on these names or Reliance for a matter?
In my understanding, 2025 would be the year in which you're likely to see the entry of Reliance Geo platform getting listed in the market. And that's where probably I think all eyes are going to be, most likely. For a few reasons, that on an annualized basis, I think this company is already 1,20,000 crore top line, 60,000 crore EBITDA making company. And at the same time, I think the way in which they have rolled out the enterprise fiber as well as home fiber. Now, the complete integration of mobile telephony along with the enterprise and home in connectivity through the fiber. I believe that I think it's a matter of time that they are probably capturing the larger part of the market of data in a systematic manner, because the end-to-end connectivity is fully established. Then probably I think you can enjoy the data network that they have created. With probably I think the possibility of verticals across all the industries that they are operating in, I believe that I think this is going to be a major play, be it agriculture, be it education, be it media and infotainment, entertainment, or e-commerce for that matter of gaming. I believe that each of these verticals, including healthcare, they are likely to launch new applications, and that's where probably I think this particular company is going to get major advantage. So 2025 should be the year in which I think we should be seeing the listing of geo platforms, and that's where probably I think the earning opportunity should be for making money out of that particular opportunity.
Taken, that is where the opportunity would lie. But
I just want to revisit Adani Enterprises with you, one of the top performers yesterday, and we were chatting just last afternoon after their decision to exit the Wilmar JV. They're going to be raising about $2 billion, and that's going to go in the core competence business, that's infrastructure, ports, etc. Highlight which companies do you think stand to be beneficiary? Of course, the sentimental knee-jerk was felt on Adani Ports, Adani Power, etc., which shot up quite a fair bit in trade.
I say, in my understanding, 2025 and 2027, this 2 year period, is going to be the period which is going to benefit maximum Adani Enterprise. Adani Enterprise is incubating lots of businesses, and each of these businesses are reaching to a stage where probably they are separately getting listed. Say, for example, Adani Airports and Adani Roads, which are incubated under Adani Enterprise, they are likely to become separate entities in this 2 year period. And if that is happening so, then probably there is an opportunity to make large part of money. What they're currently doing is systematic way of deleveraging the balance sheet on one side. At the same time, using the power of sustainable cash flows that they are having due to various businesses which are contributing high amount of cash, they're using that particular power to reinvest that money back into the business. So to a greater extent, the previous year's situation of they expanding and stretching themselves too much on the debt, that situation is now, I think, taken under control completely. And as I understand, I think it is more of a cash flow investment which is going to create the further amount of growth for this group. So in my viewpoint, I think the companies like Adani Port would be remaining relatively more formidable combination from along with Adani Enterprise because of the port's capacities have been increasing, their yield has been increasing, their automation program is basically bringing down their costs under control. So all in all put together, both these companies, Adani Enterprise, Adani Ports, they relatively look compelling opportunities from the investment perspective.
Adani Enterprises as well as Adani Ports do look as a giving a compelling opportunity at this point in time. But
Talking about the subject, come in here, Devin, on Ola Electric, because of course it was going through its own troubles, and now you have the latest competition going up because Ather Energy is likely to come up with the IPO. It's got the SEBI nod of late, and it's a 3,100 crore odd IPO is what the street is expecting, which will be an offer of sale plus I think some fresh issuance as well. With more competition coming in for the sector, what do you make of the prospects of Ola Electric from here on?
I think it's going to be a challenge because I think up till now they had the differentiation in form of the product. But today, I think the product is no more a differentiation. So obviously, I think they have to establish some new differentiation. Could it be by way of service? One do not know. But the fact remains that I think this is going to be a challenging market for them, as I see it. I think at this point, activities in form of creating new stores, new service centers, and rightfully so, because I think this is a sustainable demand I think that the market would have. But on the other side, I think the cost factor I think is not under control. So as a result of which, the profits are going to elude the investors for good time, as it looks like today. My preference would stay with I think likes of Bajaj Auto, which has demonstrated fairly good amount of ability to not only manage the cost but also I think bring the profits. Particularly the product mix along with the three-wheelers that they have got in, that is generating a good amount of money for them in the electric vehicle segment. And from this year onwards, hopefully, even the two-wheeler electric vehicles also likely to contribute into the bottom line for the company, if not handsomely, but at least they will be having a good amount of balance sheet, I think, to talk about. So in my viewpoint, I think Bajaj Auto should remain a preference point, I think, as far as investment opportunity is concerned in this particular space, even looking at two-wheelers and electric vehicles.
Devin, great to chat with you. Thanks as always for taking the time out, and here's wishing you a very happy new year from all of us.
Thank you so much and wish you all a happy new year as well, Ashley.
Thank you. Okay, let's get in.
If you like this video, then like, share and subscribe to ET Now.